Good morning. My name is Adam Kahn, and I'm the Rational Investor. Today is Saturday, August 19th. I hope you're all doing well. I saw some really interesting moves in different markets this week. Stock markets seem to have what I would call a nice short-term correction. My personal opinion is we're still in a long-term upward trend. As long as the news stays scary and the information out there continues to make people nervous and the markets keep chugging along, I think that's really healthy. That being said, let's remember for disclaimer purposes, I'm not a financial planner. Please, you guys need to seek out your own decisions for your own financial choices. Talk to your financial planners or whomever you talk to. Don't listen to me. I'm just some idiot on YouTube sharing the information I found and what works for me. Um, but I really like the panic that I saw in the stock market. I do want to talk about a couple things I've seen on YouTube with some of the ones that are really gloom and doom. Oh, you can see my coffee here on the side. I like my iced coffee. That are really gloom and doom on the real estate market. Because similarly, I think as long as the media stays scary and inventory stays low and employment stays high, it'll continue to surprise people. Now, I don't know how long that'll last, and it's quite possible there could be a correction. I don't have any issue with some of the data they point to. Negative information always is much more intelligent than what makes markets go up. My brother and I kind of joke about it. Like, when people talk about reasons why a stock market would go lower, they're really rational and they make a lot of sense. And the reason it goes up is, I don't know, it just keeps making more money and it keeps going up, which seems to be more common than all the rational reasons as why things go down. However, the YouTubers that consistently insult realtors and talk about how they're self-serving and they just tell everybody to buy no matter what, and so on and so on, it's really condescending and insulting to the industry and to them, and I find it a bit offensive. Now, I'm not a realtor, but I am in the industry. I do mortgages. But what you find if you do this long term is good advice is the best way to do things, and maybe you're right, maybe you're wrong, but they shouldn't simply be telling people to buy because they're telling to buy, and you should be able to pick up on your realtor and if they're giving you what you think is good information. There's differences of opinions as to where the market's going. And if your realtor thinks the market's still strong, that doesn't necessarily mean that they're doing it just because they make a commission. I do understand that that is what pays their bills and that's how they make a living. But if they plan to do this long term, the real way that they make a living is building relationships and giving people good information. Maybe, I'm not saying it is, the good information is calming people down in a market that looks scary. I mean, for those who are really gloom and doom and keep telling people to wait and the market's going to go lower, and they've been doing this for a year, 2 years, or longer, in some cases, even where the prices have gone lower, but interest rates have gone higher, if you were looking to buy, you could be in a worse situation today than you were a year ago, even with a 5-10% correction in the home price. So I wouldn't read into it as, oh, realtors are just giving you bad information because they make a commission. It's also possible that they see the lack of inventory and they think the market isn't doom and gloom or dire. And I will tell you what, I would rather own my home than rent it. If I want to paint my walls pink, I can paint them pink. As a lender, my advice is make sure you're comfortable with the payment and you can really afford it and you feel secure in your job. Don't overstretch. Like that's the main thing to do. And then decide if you think it's worth owning the house or not. And don't look at your primary residence as an investment. If you want to look for an investment, that's a different thing to look for. But your home is where you live, where your family is all the time. Yes, you could also rent, and if you like the mobility and ability to change places every few years, I get that. I want some stability. I want to know I have my house and it's mine and I can do what I want with it. I don't have to worry about a landlord selling it, or I don't need to move every few years, or whatever it is that some people may like out of renting. Now, that's just me. At the same time, I, to sit there and criticize an industry because you're so sure it's going lower is inappropriate and offensive. And then what responsibility to take will you take if you're wrong? I mean, for all the people out there who are just waiting and waiting and waiting, watching the market continue to get further away, are you guys going to compensate them in some form for being wrong on your prediction? You know, I, I hate to say it, it's just as culpable and just as much of a risk to tell somebody not to buy as it is to tell them to buy. Like, same as my comment about the stocks, people need to make that decision for themselves as to what fits them best and what financial decision to make. Neither is a better or worse decision. It depends on each individual person. So, enough of this ranting and raving that because interest rates are high and the Fed's going to keep raising, which they may, and it's kind of the direction I think. And I possibly think that you'll see mortgage rates continue to go higher, which, if you see housing prices continue to come down, which they haven't in every area, but they have in some, still your monthly payment may continue to go higher. At some point, it'll change, but I don't know when that is. That could be a month from now, that could be 10 years from now. Markets go a lot further than people ever expect them to do. I will agree that there's a bit of a disconnect in what I'm seeing in rental prices versus the cost to purchase. At least in the areas I've been looking at, the prices of rent seem to be softening a bit. I do think there's some possibility that the people who bought investment properties the past year or two, who were relying on the COVID rent prices, might feel some stress and potentially list some homes. But that's not going to be a huge influx. And what's interesting, where there's a disconnect on twofold in terms of where the gloom and doomers seem, in my opinion, to miss the boat is one, the new builders aren't building the way that they were in 2006, 7, and 8. The interest rate is a deterrent for them to build. They borrow to build those homes. Well, as the interest rates go higher, that slows their building and it slows how many homes they're going to put up. When 2006, 7, and 8 were happening, or 5, 6, and 7, or whatever it was, I remember moving out to Las Vegas and seeing them just put up home after home after home to meet the demand that was coming in. At this point, that isn't what's going on. They won't start building a home until somebody puts down, 10% or something for their earnest money deposit to offset the risk of the builder. They don't want to be stuck with the home. And those deals that you see are usually only from the ones that fell out. It's not like you walk on and they'll build a home for you from scratch and give you all sorts of incentives and this, that, and the other. They might offer a discounted interest rate, but that's to get the house sold. That's not because they have some magical better potion. If I'm selling a home and I have $80,000 in margin where I have a profit, well, there's no reason I might lose five or $10,000 to sell the mortgage to get a well qualified person into that house. So the other thing they're missing on their analysis is we don't have the option arm that was a large percentage of what people were buying with back then. And for those of you who don't understand it, it was a way to buy a home with four different mortgage options. You could just pay the interest, you could pay a traditional interest and principal payment. You could pay one other, I don't remember what it was, but then you could have one that was actually negative amortized, which means you're actually spending less than what you owe just to pay the interest. So you're adding how much you owe onto the principal balance of the home. So those also had a limited time frame until they matured into a traditional mortgage. So what you saw back then was a lot of people where their mortgage payments matured and went from the interest only or negative amortization choice to a fully amortized mortgage, which means, you used to get a mortgage statement that gave you four choices of payment. And I'm going to make up numbers, but let's say you could pay 600, 800, 1500, or 2400. Well, once it matured, your only option was the 2400. So if you were used to paying the $600 or $800 payment just because it was more attractive to you, and all of a sudden your mortgage matured, and now you're owing $2400 a month, and the house started going down in price, you might be liable to let that house go. Fast forward to today's market where you've pinned yourself into a house because you have a low 3% or maybe a 4% interest rate, and interest rates are now in the sevens and they're actually even pushing the eights. And to move, you're going to raise your mortgage payment significantly. Even if that home value comes down a bit, I don't see you panicking to get out of it because you can't get into something else with a lower payment. So if your house dropped from 700,000 to 600,000 and you look to move and realize, wait a second, I'm going to go from a $2,500 a month payment to a $3,500 a month payment, even with the lower prices, what's going to be your incentive to jump ship and get out of that house because the prices are falling? There seems to be some disconnect in what has changed. Now, markets are markets, I agree with that, and things go up and things go down. But once you factor in what inflation has done in the world, not just housing, look at the cost of eggs, look at the cost at the grocery store, look at what it costs to get your oil change and car payments and everything else. Housing's no different. So if you factor in what's happened in inflation to the costs of the homes, I don't think they've gone up quite as much as people think. That it's just part of the inflation process too. Maybe they come down a little, but I don't think you'll see a huge amount of inventory to cause a 2008 type of crash. So those of you with your data, just be a little bit more respectful. Talk about the markets, give your opinion. Don't start bashing people that you don't even know for no reason. It makes no sense to me. Again, I made a few comments on your page. It's interesting that none of you respond to it. There's two in particular that consistently, it's like it's just bad. I don't know if it's to build viewership or if it's because they just think that way, but really I'd appreciate a response, at least to have a discussion of why you seem to think that. I've been doing this a long time. I have no reason to give somebody bad information. I'm not worried about work. If I didn't do work, I'd be okay too. I could go figure something else out. So have a great day. I hope you guys appreciate the markets. My best advice is keep saving, keep putting away. That's how you get rich. Invest in whatever it is you know about that you think will continue to go. I don't care if it's baseball cards or wine or whatever. I think it's all a good investment if you know the market well and you know where the values are. So anyway, thumbs up, like, subscribe, say hello. Feel free to chime in and have a great day. Whoop, it's not stopping. I'll say goodbye once it stops.